Okay, let's explore the standard costing situation. We've got the Riley Valve Company, and they manufactured 7,600 units during January of a control valve used by milk processors in its Kansas City plant. And we've got the records that you see on the screen right there. Okay, direct labor, they used 46,400 hours at $14.50 is their average cost per hour. They purchased 31,000 pounds at $2.50 per pound, and they used 30,100 pounds. Now, they already had developed the following standard prime costs. So we know direct material, the standard called for 4 pounds at $2.40 per pound, and direct labor required 6 hours at a $15 direct labor rate. You can think of that as an average direct labor rate. So the standard prime cost per unit is $99.60. Okay, the first question asks us, what would Riley Valve Company's standard direct material product cost be for January? Now, let me remove this so you can see the solution. Okay, and now you see how we come up with that. You take the units, which was the 7,600 units, times the standard pounds per unit times the cost per pound. And when you multiply that out, you'll come up with 72,960 as the standard direct material product cost. Now, what about standard direct labor product cost? In other words, we've covered material, let's cover labor. Well, take the same units times the $6 standard time, right? 6 hours per unit times the $15 standard rate. We come up with 684,000. So that's what the standard would call for direct labor. Okay, next we're going to tackle the question, what was the material variance? Okay, and we've got a couple material variants. Actually, this should say what was the material price variance? Why don't we start off with that? All right, the direct material price variance is the difference between the actual price and the standard price times the actual quantity. So you could multiply actual quantity times the actual price and then subtract the actual price times the standard price. So where did this information come from? We used 30,100 of the actual quantity, and then the difference between 250 and 240 is 10 cents. So 30,100 times 10 cents, or you could do this long calculation, comes up with 3,010. Now, since the standard called for 240 and it was actually 250, right? You can see the numbers here. We know it's unfavorable because we spent more per pound than what the standard called for. All right, so now let's change the question to say, well, what was the direct material quantity variance? Well, with the quantity variance, we're comparing the difference between the quantities times the standard price. So we could take the quantity differences times the standard price, or you can do this long calculation, right? A little bit longer. Take the actual quantity times the standard price. That was 30,100. They told us that's what we used right there. The standard price is 240, and then compare that to the standard quantity that we were supposed to use times 240. Now, you may be wondering, where did the 30,400 come from? Okay, so there I put it on the screen. How did we come up with the 30,400? Well, you took the 7,600 units that we made at 4 pounds per unit. So that would call for 30,400 as the standard quantity. And that's how you calculate the direct material quantity variance. All right, now what if they asked what was the direct labor rate variance? Well, with the rate variance, we're going to take the actual hours and compare it to the difference between the actual rate and the standard rate. Or again, you can do this longer calculation where you take actual hours times the actual rate, calculate that amount, and compare it to the actual hours times the standard rate. Both approaches will get you the same answer mathematically. So the actual hours were 46,400, and the difference between the actual rate and the standard rate is the difference between 1450, which we actually incurred, and 15, which was called for in the standard. So in this case, the variance is favorable because the actual labor rate was lower than what was called for in the standard. Okay, and finally we'll tackle the direct labor efficiency variance. Now keep in mind, sometimes this is called direct labor usage variance, and sometimes I've heard it called the direct labor quantity variance, but usually direct labor efficiency variance gets used quite often. And here what we're tackling, or what we're determining, is we're taking the standard rate of labor, direct labor, and comparing it to the actual hours used versus the standard hours. Again, you can do the long calculation. So the actual hours are 46,400 given right here, and the standard hours were 45,600. And then we compare that to the $15 direct labor standard rate to come up with the variance. Now, in this case, our actual hours were greater than what was permitted for the standard, and we come up with an unfavorable variance. Now again, you may be wondering, where did the 45,600 come from? Okay, so I've put that in the screen. We made 7,600 units, so that tells us the level of activity, and then we have to multiply that by the standard. In this case, 6 hours. So 6 hours per unit says we should have used, per the standard, 45,600, and that's where that came from. Okay, hope you found this helpful.